Good afternoon, everybody. I'm so thrilled that you're here for our community forum, and I'm really excited about the conversation today. So before you get started, let me just take you through the process. First of all, if everything that's going on right now, and regarding all the conversations that are having through the OEL, the governor's office, legislators. So he will be a good person. Emilio is a straight talker. And this is your chance to directly ask someone of his stature who is dealing direct the governor's office and everybody else. We have Kelly Townsend from the Townsend Group. Kelly is part of the BLI leadership team. She has a very terrific organization, and she's going to be talking about how do we make these business decisions, and if we go in these different lanes, what does this look like, and how do we navigate? So this is going to be John Oletta, who is also a business coach. He coaches senior executives in major corporations to let us know what everybody is doing out there, and again, how to best navigate. Today, I want to first of all introduce Senator Ellen Bogdanoff, and I want to first of all personally thank Ellen, who is, as many of you know, she was the head of FACM. She is a great support the business owners and their perspective on what they need in order to successfully be in business. And I went to Ellen and I said, look, we've got to have these hard, tough conversations. And Ellen is the person to have these tough conversations with. And I said, here's the areas. We need to be able to talk about the point of view of this virus, parents, families, liabilities. So she said, oh, wait a minute, let's call Anita. I said, oh my God, Setnor. Anita is a great friend of the BLI. You've seen her at our conferences. Anita, thank you very much for offering to sit in to talk about risk liability. This is your chance, guys, to ask all your questions. And then my new topic, as everybody knows, is some of you are going to have to close your business. I went back to Ellen. Ellen, can we have this hard conversation? And Ellen took Mark Stempler and John from Becker, John Collenberg, and John, thank you very much for jumping in at the last minute. They're going to be able to have these hard conversations with you about what does closing a business look like, what are the liabilities, what are the considerations. So with that, Ellen is going to do this as a panel discussion. Type in your questions. And either Ellen or Aaron asking the questions, we will get all of your questions today. And Ellen, I think you're going to have a lot of questions. So we'll just navigate through all this so that we really get to address everybody. Ellen, thank you very much.
You're welcome. Thank you, Robin. Are we going to do the PowerPoint just to kind of give an overview of where we're headed? Okay. And I'll tell you when to switch it because I'm not the one in control of it, which is a problem for me because I like to be in control. Who's putting it up?
It's me, Ellen.
Okay, okay.
Are you ready for it to go up, Ellen?
Yeah, I'm ready. I'm waiting. That's right. Yep. I want to first thank Anita, John, and Mark for coming on and sharing. And this is going to be a casual conversation. And that's why I think it's important for you to have those questions. And we're going to kind of try to present some scenarios, some real life scenarios, so you can kind of relate to them. This is about your exposure, your risk, your liabilities during this unprecedented time. You can go ahead and switch it to the next. You can switch it. This is us, okay? Mark and I co-lead the Early Learning Advisory Practice Group at Becker. And we've done a lot with health and safety violations, but because of my background and because of Mark's litigation background, we've been able to have a lot of success in this area, and we get a lot of just general questions. And I think Robin's request was timely because my phone has been ringing a lot in terms of people just asking generic questions. This is what's happening, you know, what do I do from here? So, and then next is obviously Anita Byer, who is Setnor Byer Insurance and Risk. She has an expertise in insurance. She's been doing it for over 35 years, and she's going to be able to answer some of those tough questions, especially when we're looking now, and all of us are probably watching way too much TV, but seeing a lot of these commercials about, you know, call me before you call your insurance agent. You're really covered. You're not really covered. So she'll be able to answer some of those questions. And then obviously John is going to be talking about the tough issues in terms of how do you protect your assets. Is bankruptcy an option? How do you close your business? How do you renegotiate your contracts? All of those things that have to do with a business that's in trying times. Next one. Well, I think this is the biggest question we all have, because nobody really knows who's calling the shots. And we're listening to a lot of different voices out there. You've got the president declaring things. We've got Department of Children and Families that's in charge, the Office of Early Learning, your Department of Health, the governor, the cities, the counties, the courts, the parents, the teachers, and law enforcement. All of these people kind of have a say in your business. We know that early learning navigates a lot of different agencies in the good times. It is quadrupled in the bad times. So we need to know, where are you taking your lead from? And hopefully we can help guide you in that area. Next one. Well, this is going to be mostly Anita's area in terms of you've got a lot of risk involved here. How do you transfer that risk? These are some of the questions that we're going to be asking and answering. Does my liability policy cover me if I'm sued by a parent? What definitions matter? Are my employees covered? Can my employees sue me if they get sick or if I don't give them time off? What is employer's liability and will I be covered by that? Should I report the potential claim even if I know I'm not covered? And I think that's kind of one of the biggest things is the insurance coverage itself. Is it actually there in the time of when you're dealing with a virus? Next one. And then this is going to be mostly John's area, which is going to be avoiding financial ruin. Some of the questions I've gotten is, should I suspend my license and close my doors? Can I get out of my lease? Can I renegotiate all of my various contracts to try to reduce my costs? How do I file for protection in court? And what else can I do to protect myself? And Robin and I have had those conversations offline, and these are some very difficult choices for a lot of our childcare owners. Next one. Well, these are the questions we're going to answer. So I'm not a big fan of PowerPoints, you can tell. So I just wanted to kind of give you an overview, and we're going to go right into the discussion. You can close it out if you want. So we're back online. I'm going to kind of create a scenario of what I would call a typical childcare operation. And we could maybe, guys, kind of use that context in terms of thinking about answering the questions. And let's say that I have, 80 children, can fit into my center, which is called capacity. So I've got 80 in capacity. I'm open. I've determined that I can meet the protocols by the CDC, so I'm going to keep my operation open. But I went from like 80 to only 25 kids showing up. And sometimes the 25 kids don't show up every day. I still have the same rent. I still have the same maintenance costs. I still have all of the same costs. And I've got teachers on furlough. I want to keep them employed. Unemployment is out there, but some of them I don't want to retrain when I reopen. I've got all of this stuff going on. And I just need to know, what my options are. And I know Robin talks consistently about, kind of do the numbers. So we're going to get into that. And I think one of the first questions I want to ask, because this was asked of me for one of my other clients, was what's your COVID plan? In other words, businesses were expected to have a COVID plan, and they didn't even really know what that meant. Obviously the CDC put forth guidelines, but they want you to have like a plan of best practices. And I guess I could ask this one of you, Mark. If I have a plan, does that protect me from liability? And do I really have liability? In other words, if I have a parent who gets sick and absolutely claims the only place she's ever gone is the child care center, and she's protected herself, do I have an exposure? Can I be sued for somebody getting sick? Or the child getting sick coming home from the child care center? Can I be sued? You have to unmute yourself. Sorry.
Got it. Thank you. Yeah, quite honestly, that is a possibility. First of all, anyone can sue for anything just about any time. So whether or not they can file a lawsuit, sure, they can file it. Does it have merit? That's another question. Having a written policy is certainly helpful to help prevent liability. For example, if there's a written policy at a daycare center that outlines the steps that the center is going to take on a daily, half-daily, or hourly basis in terms of monitoring its children, in terms of making sure the facility is clean, in terms of just monitoring for anything unusual, they can at least rely on that written plan to say, look, we've checked the boxes, we've done all these things. What some daycare facilities might want to consider doing is creating a liability waiver form. And these are used by businesses of all types that can help insulate a daycare facility or childcare facility from liability. So for example, the liability waiver might include a warning about COVID-19, stating that the child or a parent or a caregiver who drops off a child might be at a heightened risk by attending or visiting the facility. By signing the agreement, the parent or guardian can voluntarily acknowledge that there's a risk that children might be exposed, and they can include a liability waiver for all things, including injuries, sicknesses, those kinds of things, and prevent a claim that might arise in negligence or just resulting from a lack of whatever they want to allege in the lawsuit.
Yeah, but Mark, what if I'm a parent and I'm like, I'm not signing that. I'm not releasing you of liability because I don't know if you're going to do what you're going to do. And quite frankly, I don't want to sign it.
Well, then
So
I think the daycare would have two options. They can let the child in without signing it, and that might increase their exposure to a lawsuit. Or they could reject the child from entering the facility and say, I'm sorry, unless you sign the waiver, we can't take you on as a participant in our facility.
Okay, Anita, since we're on the issue of liability, most people like to transfer the risk, right? They want to buy insurance. They want it all covered. I think we have a couple of issues. Number one, we have liability if somebody is sued because somebody gets sick. The other one, obviously, is the biggest one, which is business interruption. I have lost revenue because of a pandemic. Where's my coverage, and why am I not covered, or am I covered?
All right. Well, from a liability standpoint, you are covered. It would be a very rare policy that would have an exclusion under the liabilities section for a virus, bacteria contamination. We would add to that disclaimer, and we have a risk management group that tries to minimize risk for clients so the liabilities are reduced. We would have been suggesting to our child care centers to include a requirement, an attestation from the parent that they've taken their own child's temperature and have it deliver that child to that child care center with anything but a normal temperature. So now that's a risk transfer back to them. So not only a disclaimer where I won't sue you, but I actually am in charge of my own child and delivering them to you. So liability, no problem. We haven't really gotten a suit yet. It is going to be hard to prove where they contracted the disease. I imagine the insurers will fight back. They're very good at fighting. They're warriors, right? Oh gosh, I should have played with that. What should I? And then as far as business interruption, every policy has to be read. Okay, it's a contract law. What we're seeing in a majority of policies, however, is a specific virus exclusion. So it says we're going to insure your business interruption, lost income from an event that's insured, a trigger, like fire, lightning, hurricane. And the policies generally don't list the perils that are covered nowadays. They actually list what's not covered. And the majority of policies exclude virus contamination bacteria. And this started, that specific virus exclusion, started with SARS. So when the litigation started, the insurer said, oh my goodness, now we have to add viruses to these policies and excluded perils. So that peril is there. There are some laws, circling the nation trying to void that exclusion. So far, they haven't been terribly successful. And I don't think we've had both chambers in any state agree that we're going to go back into the insurance policies and make the insurers pay for a peril excluded. Having said that, if there is no virus exclusion, how would the insurer respond? Now it gets a little dicey. Now they're going to argue that the premises needs to be damaged. And they're going to argue there's no damage. The litigators will argue there is damage, evidenced by the fact that you need 2 or 3 days to clean a place. Is that not damage? The insurers are probably going to argue that that would be like insuring a toilet bowl. I know that sounds a little bit crude, but you got to clean your toilet bowl at least once a week, and that's not exactly an insured claim. So I think there's going to be some insurers might concede, but they've got an issue with capital, whether they could pay the claim. So we have, first we had the virus, then we had the trigger, then we have the property damage, and then there's a third coverage called civil authority. Civil authority says if your business is shut down after 72 hours, we'll pay this many days of business interruption. And most of those extensions say for property damage. Again, a fire next door or adjacent that limits your ability to access your premise. But some of that civil authority and those endorsements don't require physical damage. That is why it's critical for the policy to be read. But Ellen, I want to give you one fact, because the litigators are out there. They're saying, call us, we'll help you. I first would suggest never lay out money to get involved in litigation on this matter. Read your policy first, because if you have a virus exclusion and if you have, it's required for property damage is required, then it's going to be a very, very big battle, and you're going to be economically behind the 8 ball if you pay out money. If the lawyer's willing to take it on for free on a contingency, what the heck, try it, right? But I want to give you the numbers. There's approximately 633 billion of U.S. surplus, the U.S. property casualty insurers, how much they have in the bank for big unexpected storms. Half of that money would be gone in 2 months, half of the surplus. Our estimated business interruption losses for businesses of less than 100, which would be you guys typically, is 255 to 431 billion per month. That would be the expense the insurers would have to pay. Their annual premium per month is $6 billion. So if the insurers ultimately pay, they'll be out of business. They won't be there for the storm and the fire. But I so understand the need to test that and go to the insurers. But we're getting denials. We haven't gotten anything but denials. And there are some agents telling you it could be paid, and it's largely, unfortunately, not going to be paid.
So just as a general, I know, because from a practical standpoint, I know we have a lot of, I saw a commercial the other day where there was an attorney saying, don't call your insurance agent, don't call your insurance company, call me first. Is that a wise move? I mean, is there any advantage to getting an attorney involved before you call your insurance agent to find out whether or not there's a claim?
No, I think calling your insurance agent is one more opinion. Just get another opinion. I think they want to make certain they're involved in it from the get-go, so they're not excluded from the process. But as a private business owner, if you trust your agent, call your agent, ask them to show where in the policy it might be excluded or covered. That way you're armed with better quality information. So it doesn't hurt to call. Maybe you don't want to put in a claim until you contact that attorney if you feel litigation is in your future. But again, I wouldn't lay out any money for it, because I think these are going to fail, which is, the lawyers might disagree, but I think this is going to be a long haul.
John is chomping at the bit, so I'm
yeah,
gonna...
he's about to say something. I get it.
John.
That's okay.
Yeah. So business interruption insurance is going to be the next litigation that makes tobacco look small. Just so everyone understands, there's a class action lawsuit that already started in Miami. There's another one that started in Fort Lauderdale. The insurance companies have asked the case to be managed by what's called a multi-district litigation, which I've done before, very complicated matters. If you make a business interruption claim, you're looking at 10 years before you see a dollar. That's the long and short of it. But let me just say this, that some insurance companies, when you call and say, they have a pre-recorded message. If you're making a COVID-19 claim, don't make it. It's not covered. Now, I don't think that's necessarily the appropriate way to handle someone who's calling about that. But there are some insurance companies who have that recorded message for you. Let's see, the day the government shutdown was ordered, or the stay-at-home was ordered, all of these insurance companies, which I've represented, but they all sent out memos from firms I used to work for that explained to everybody why there was no coverage. So the insurance companies have a head start to try to beat back all the business interruption claims. And despite all of that, you have a lot of law firms who are picking this up on a contingency fee because there is wiggle in those policies based on the way they're written, and it depends on what your policy says. So I don't think it's a bad idea to talk to an attorney. I also don't think it's a bad idea to talk to your agent and tell them make the claim anyway. Let it get denied. Because one thing's for sure, if you don't make the claim, you definitely aren't going to get covered, no matter what happens down the road. So,
well, if you're also too, John, if you're talking 10 years from now, I mean, you know, you can make a point, but that doesn't mean that you're going to be able to sustain your business for that period of time. So I guess in your assessment on the immediate, you know, because a lot of these businesses have 3, 4, 5 months. I mean, even, you know, standard practices, they want you to have 6 months of overhead in the bank for any business to survive. And clearly this could go far beyond 6 months in terms of the reduction.
This claim would not be something that you should anticipate as helping you get through this. It's not. This is something that it's like a lottery ticket. If you get it down the road, and that's how you should view it.
So I think there's a bright star in some of this in a sense where, and I even saw a lot of our kids go. I mean, I know that I could go back to work, but when I had a 6-year-old at home, I'm not going anywhere unless I have some place to place her. So I think that's probably the good news for, you know, a lot of the childcare owners is that there might be opportunity. There's a lot of opportunity because you're a critical part of getting business back back on track. I guess the next question I have is probably has to do with, again, for Mark and John on a legal side, you know, childcare was considered an essential business. Does that in and of itself, because I'm an essential business and I'm being asked to stay open, if I do the minimum on the CDC protocols, and again, you know, you always have to prove what's going on the inside of a childcare center, does that give me some level of immunity from liability? Because I'm essential and I have to operate?
Yeah, I don't think that it gives you immunity. Aside from the CDC guidelines, you know, there are other common sense practices that are more tailored toward daycare facilities. There are also standards that are set forth in the child care facility handbook. For example, section 6 of that handbook talks about health requirements and specifically talks about communicable disease control and steps that facilities can take to manage that. But importantly, the very first thing it says in section 6.1 is that children in care must be observed on a daily basis for signs of communicable disease. 6.12 of that handbook talks about what child care operators are supposed to do in terms of outbreaks and who they're supposed to notify. In addition to that, school readiness and VPK contracts typically include language that requires providers to report unusual incidents within a certain amount of days. Active or known cases of COVID-19 could fall under that category and likely do. So I don't think that the CDC guidelines, just following them, would absolve from liability, but it goes beyond that. It goes beyond rather rises to what local health officials are saying, and of course what DCF is mandating.
So I guess there was one question on there. Some of the providers are looking for a standard waiver for the parents to sign. And I think there was like another question is like, if you have your protocols and you say, I have my COVID-19 plan and this is what it is, should the parents also sign that, or at least sign that they have received and understood and read a copy, like we make them do with the handbooks, you know? I read this handbook, this 50-page handbook. No, I didn't, but I said I did. In other words, should we have them sign, and should we present to every single parent the COVID-19 plan that we've implemented? Is that extra protection, Mark?
Yeah, I think that would be a level of extra protection. You know, it might depend on the particular community or geographic location that they're in, but that would certainly be a good practice to at least put everyone on notice about what those practices are.
Anita, let's talk about, you know, obviously after every situation like this, and as, you know, John has indicated, we've got the class actions. The insurance companies will always respond like they did after Hurricane Andrew. They do after every major catastrophe that kind of reshapes the future. How do you think the insurance companies are going to respond to this, and what additional requirements do you think are going to be thrust upon not only childcare owners but other businesses after something like this? What do you foresee?
We're already seeing it actually. The insurance companies move very, very quickly. We got a virus exclusion in the other day that was 1 page long. They defined a virus every way you could define it. So that's to prevent litigation and to make it bomb-proof. That's one thing that's happening. Another thing that's happening, so we're going to be very, very clear the virus is not covered. They will probably start defining what property damage is, physical damage, not leaving it up to courts. They will also, the industry has already responded to this by offering COVID protection, virus protection, a policy, whether it's a traditional property and casualty or a parametrics kind of policy. You will, in the future, the near short term, be able to buy virus insurance. Nobody will pay for it. The pricing that's coming out, it's a Lloyd's of London or more of that exotic. The prices coming out are 125% of the limit you pick. So in a metropolitan area that's dense, let's say in New York, New Jersey, the bigger the Newarks in the city, you're going to see 5%. So if you buy $1 million of virus coverage, you're going to pay $50,000 for it. The last time this coverage came out, which about 6-7 years ago, it might have been post Zika, might have been 10 years ago. They couldn't find a market for it because it's too pricey. And so we're seeing that. As far as business interruption, we are now getting insurance companies saying we will not increase business interruption limits midterm. And if you've never had business interruption, we want to know why you want it. So they're getting very, very picky about business interruption. And I suspect they will get very skittish in the states that have been aggressive enough to float the idea of trying to modify the insurance contract to include coverage that's specifically excluded. So they'll become a little bit hostile in certain jurisdictions.
So Anita, I'm just going to pose probably a difficult question. One that, I know that I got when I was in the insurance business, and I get as a lawyer. Insurance, especially when it comes to health insurance too, well, insurance is there to pay for the catastrophic loss. It's not there for the nickel and dime, little claims, etc. Arguably, this is a catastrophic loss. How do you walk the average insured through the process as to why? And I think you kind of alluded to it when you gave us some of those numbers, but how do you, when talking to the group that's right now on this, Zoom webinar, can talk to them like they were insured and explain to them why this could not possibly be covered, even though it is catastrophic in nature?
Well, of course we have the virus exclusion, but why is the virus exclusion there? Our insurance industry has to produce a rate for an individual enterprise based on the probability of loss for that enterprise. And everything's priced based on, can I make some money in this deal? So I don't want to write too many windstorm risks in South Florida, right? I don't want to write too many earthquake risks in California. So they are picking their risks to make certain it's diversified, and a single event will not put them out of business. This is a worldwide event. Every city, every neighborhood, every business. They do not insure events like this. And most of my business owners, while upset, some are going out of business, they do understand that if the federal government's having trouble insuring it, and then we're talking about trillions and trillions of dollars, how exactly would private enterprise insure it? And most people go, not that I wanted to hear that, but I get it. And 99% of people are understanding that. And again, we've initially told our clients, no, this is not covered, and realized with all the lawyers out there saying it is covered, we've just said to our clients now, put the claim in. Let the insurance company be the bad guy, because I don't want to be don't shoot the messenger, and that's what's been happening a little bit. So we say to our clients, sure, we'll put the claim in. Do I think it's wasted motion a little bit? If you have a virus exclusion, it's wasted motion, but I understand it. I understand the need.
So John, that brings me to you. We're not getting our insurance claims paid. Right now, South Florida is not included in the governor's order. So for the most part, businesses are closed, so people don't need childcare. I've been closed now, or, only have about 30% of my normal student population since about March 15th. I got till June 1st before my world explodes. I need to protect myself. I've got a mortgage on my house. I owe all kinds of contracts. I've got a lease on my premises where my child care center is. Lord, I need help. I need to navigate this. What do I do? I mean, do I close my doors and run? I mean, how do I protect myself so that I don't lose losing my business is one thing, and that stinks. But what about everything else that I have? Because, my landlord made me sign personally. He wouldn't let me just put the corporation. So I'm personally liable for my lease. I've got 3 years left on it. I've got a maintenance contract that says I can't cancel it for 12 months. I've got all kinds of stuff going on, and I need to protect myself. And I just need to understand what steps I can take as a child care owner to protect myself.
Wow, you sure know how to fill a plate. How much time do we have? First of all, everybody's situation, every lease, if insurance policies are all different, leases run the gambit. They're all different. Some have personal guarantees, some don't have personal guarantees. Some have gross leases, some have acceleration clauses, some don't. They're all over the place. There's also loans. Some businesses have loans, and some loans are just unsecured loans. Some are secured loans. Some are secured loans with personal guarantees. Some are secured loans with personal guarantees that, with a personal guarantee, offer security. There are lots of different ways these the finances for a business are put in place, especially one like a early learning facility. The idea is, what is going to provide you the safety that the business owner wants? And that's going to depend on if you have a personal guarantee or not. If you are in business and you want to file your business into bankruptcy or close it, that's not going to get you out of your personal guarantee. So the question is how do you cope with the personal guarantee? So let's take a couple of different hypothetical situations. Let's say you have a lease that has an acceleration clause, and you have, as you said, Ellen, 3 years left on the lease. And let's say your lease payment is $6,000 a month. You do the math, you're looking at a couple $100,000 in acceleration, and you have a personal guarantee. And as part of your personal guarantee, you pledged your bank account that has money in it, or you pledged an interest in a retirement account as security. If you didn't do any of those things, don't do it now, right? That would be increasing your risk when there's a lot of uncertainty. So don't do it now. But if you've already done that, filing the bankruptcy to reorganize your business gives you some leverage with the landlord. So if you're looking at saving your business and you want to reorganize your debt, you can file the bankruptcy. You can try to renegotiate the lease, or you can ultimately reject the lease and move into another facility with a new lease. It's not easy, but that's something you can try to do. If you want to close your business, because bankruptcy is an expensive adventure, and you lose a lot of control, it may be best to try to negotiate with the landlord a way to get around the personal guarantee. Sometimes, if you've had a lease that's been in place for a while and may have rent that's below market, if that's the case, the landlord might be willing to let you go, close the doors, surrender the property, and have the landlord relet the premises. That's just on the lease. We haven't talked about loans. If you have loans, that's another creditor you have to deal with. And if it's a secured loan, if you file bankruptcy, the secured creditor is going to run that case, not you, because the secured creditor has a priority interest over everything there is in the bankruptcy. So the idea is to try to, what I would do if I were you now, and you have from here to June, I would evaluate what your revenue sources look like coming in, try to determine what it's going to take to make it through, given the current circumstances. What is the debt you have to pay? And what do you need to get it down to in order to survive? And then try to talk to your creditors and get them to agree to some sort of restructuring, some new deal. Depending upon the creditor and where you are in this process, they're doing these things. They are working things out, because it's better to have a performing loan and a performing lease than it is to have a non-performing and vacancies, and if it's secured, assets on a balance sheet that you can't liquidate. So
What's going on, John? What's going on with the banks, though? If I have a mortgage on the, let's say I don't have a lease, but I have a mortgage on the property. Did the feds give us some relief? They said I think I remember hearing that you didn't have to pay your mortgage for a couple months or something like that.
yeah, I don't think that's for commercial property. I think that's for FHA loans. So I think what's going to happen is on commercial properties, you have Florida put in a moratorium on foreclosures. So if you try to do a foreclosure, you probably file the case, but it can't go. You can't get possession. There's no auctions, so you can't liquidate properties. And we went through this. I've spoken with a bunch of institutional lending sources that I know, and they're expecting default rates to hit 9% by the end of the third quarter, beginning of the fourth quarter this year. And just for a frame of reference, 9% is what we had in 2008 when we had the foreclosure crisis. But instead of it being hotspots like Florida, Arizona, New Orleans, this is, as Anita said, this is going to be nationwide. The default rate is going to be, while the rate is going to be the same, the numbers are going to be much larger.
So I guess we could sit here and kind of, make some educated guesses. I mean, the government in large part created, kind of exacerbated this, because even though there was the pandemic, they made the decisions as to who could stay open, who couldn't stay open. And even though childcare centers were considered essential, their business and revenue was directly dependent on whether or not people actually had jobs to pay for childcare. So in essence, they were kind of hit indirectly, severely. Can we anticipate, are we hearing anything in all of your travels? I don't know if Mark, if you're hearing anything, John, Anita, you're kind of knee deep in this. Are we hearing anything that, considering that the government keeps printing money and throwing it out there, the PPP is going to be questionable because now they're kind of second guessing how they laid out all of that money. Obviously, a lot of people didn't get it. Can we anticipate, especially with how important childcare is to restart our economy? Do you think there's going to be something else out there that they're going to be doing, whether it has to do with, the landlords or, maybe additional funding? Can we anticipate anything happening?
I mean, I don't see it. I don't see it coming. Not like that. Whatever assistance is forthcoming is probably going to have more restrictions rather than less restrictions going forward. So it's going to be even harder to get than PPP was. And PPP was easy, but people still didn't get it because it was hard to get. So I don't see free money being splashed around anymore.
Well, Anita, I'm going to go back to you because there was something that I forgot to ask, and that was that as an essential employer, I have employees that may or may not feel comfortable. I ask an employee to come in. They decide that they would rather not be exposed. They're not in the high risk category. They're in their 20s, they're healthy. They tell you no way, and they voluntarily, they stay home. I decide to fire them because I really need people. Am I exposed from a liability standpoint? I mean, in terms of insurance, is the employer's liability, can they claim workers' compensation? I know they can claim unemployment, but can they claim workers' compensation or?
Okay, well,
If got sick, can they claim workers' compensation?
With workers' comp, okay, so there's occupational injury in the workers' comp law. So if your occupation exposes you to a disease that is not an ordinary disease of life, Think of maybe asbestos. You're working in a school and the school's filled with asbestos. So that janitor would have an occupational injury. It was not a disease associated with life, and it was due to a unique condition at that premise. It's going to be pretty hard to prove where somebody contracted COVID. So whether it will become an occupational injury or not, first of all, it's going to be state by state. Every state's a little bit different about occupational injury. Washington state just passed a law that COVID would be considered occupational injury for first responders. They explicitly created that law. We're going to see what the other states do, but it's going to be the insurance companies are going to have to adjust the claim and look, but it does require you to be sick. And then it would also pay wages if, again, it is not a disease of ordinary life. That remains to be seen. The first part of that question, though, was about an employee. I said that considers the premise an unsafe premise, and you want to bring them back in, and they say no. And to limit that liability, it would be more if you fire them without appropriate measures in place. It could be an OSHA whistleblower complaint. In order to prevent that, and I actually had that happen to me. I had an employee that did not want to come into the premise, expressed that they felt the premise was unsafe. And I not only spoke to them and coached them, I wrote a pretty lengthy letter that we're complying with the CDC. We've got the distancing, we've got the masks, we've got, the premises is clean, and it's my responsibility to determine where people need to work and when. And once I have all of the risk management, mitigation, containment elements in place, I speak to them, I document. It's going to be a very, very difficult and long road for any employee to prevail in any action against the employer as it relates to whistleblower and OSHA. And I think I answered your questions.
So what about employer's liability? I know that it's kind of, it's for, ancillary, like loss of consortium or whatever. If somebody gets sick, do the family members potentially have a claim against the child care center?
Section 2 of the workers' comp would be loss of consortium. Section 2 is also for dual capacity. When an employer has two roles, two-role ROLES. Maybe they're manufacturing a product that injures an employee, and at the same time the employee is working at a plant. So that dual capacity also would be Section 2. What we call third party over Section 2, but any intentional acts, remember, if we're talking about an employee feeling you're putting them in harm's way, if they prevail in that action, they've gone to OSHA, whistleblower, it's an intentional act that's not covered by insurance. In fact, you lose your tort immunity. I don't want to get anybody nervous. I really believe the courts are going to be very hospitable to employers that have CDC measures in place and they care about their employees. I wouldn't be concerned about that. Could there be litigation? Absolutely. But largely, I think they're going to fail. And the courts are looking. Florida's looking at it. Florida's very pro-business. Florida's looking at it, as well as other states, limitation on litigation relative to stuff like that and products liability. They're looking seriously at it for small businesses.
So, Mark, is there anything you think that you can share with the group that could be helpful in terms of liability, exposures, anything they can do to protect themselves? Is there anything that we've left out that is of concern?
Yeah, I just think that, typical business practices that might be applied to other issues could be applied to how they're going to treat this disease. So having a set of plans and protocols for how the business is going to operate is certainly going to be helpful. For example, a checklist that notifies everyone of not only the CDC measures, but whatever other preventative measures a facility wants to put in place, posting those, making those known so that there's something always to fall back on. In addition, like I said at the beginning, a liability waiver, though maybe not pleasant to receive from participants or from rather parents or have kids in a facility, but a liability waiver could help insulate liability down the road if the parent signs off on it and acknowledges that this is a disease that could be contracted here just like anywhere, but they will hold the facility not liable or not responsible if something happens. And just to piggyback on what Anita said earlier, I understand that Governor DeSantis and other lawmakers are considering either a bill or an executive order that would insulate businesses from any claims where someone says that they contracted the virus on their premises. I don't know if something like that will ultimately pass or whatever, but it is being considered not only in the state of Florida, but also at the federal level as well. I think Mitch McConnell was talking about it just yesterday. So it'll be interesting to see how that shakes out. But in the meantime, document any and all claims, any and all issues. Make sure you have a plan in place and make sure that you follow the child facility handbook to the T, because that will also give you a level of insulation.
So the other question I have is, we know that not all waivers are alike. Is there a standard waiver that perhaps maybe is available to child, care owners that they can use, that is kind of like we'd call the best practices of waivers?
I'm not aware of one specific waiver. And some of them might need to be tailored depending on the facility and its unique characteristics. But, it's certainly something that can be drafted and can be made available to facilities, to cover those kinds of issues. Okay.
You might be getting a lot of calls, Mark. There's a lot of comments on the chat room. Everybody's looking for some sort of standard waiver where they can maybe, edit and add in their own unique components to it. Robin, I don't know if you have any, I haven't been able to look at all of the chats. If you have any additional questions that have come in that you maybe would like to share?
Yes. So let's see, since you asked me, I'll go through this. Someone was asking about nonprofits. So that was, Lisa, if you want to unmic yourself, you said, what about nonprofit organizations? And I think you're in a church, so I wasn't sure exactly what your question was. I guess she's not on mic. All right, I'll go to Jenny.
I just unmuted Lieska.
Okay, now you can.
Yes, hi, Lieska.
Oh, hi, Robin. My question is, we heard that there's a lot of helps over there for child care providers, like the government are offering. And I don't know, in our case, as a nonprofit organization, our school belongs to a church. And for the PPP, we were able to apply, but I don't know others help that we can have access to, because we closed the school March 16, and it's been 2 months, and I don't see where we can open the school again.
So you're saving, did you receive the PPP?
I mean, we applied for it. We didn't receive yet, but we did apply for it.
So I would assume, Mark and John, if you receive the PPP and then you don't open, don't you have to send it back? What's the legal issue?
But I still paying to my staff. We are working online with the kids. We have been offering the kids Zoom classes, and we pay the salary until today. Today we are paying the staff salary.
So Lisa, what is your specific question?
My question is, if we are not able to open soon, obviously we don't gonna have the funds to keep going with the school closed. So if I'm gonna keep my staff, if we have other option, or just send my staff and apply for unemployment and wait until we can open again. What is your recommendation about that?
So you're talking about closing a nonprofit operation, correct?
If we don't have enough kids to open again.
Right, okay, so to close the nonprofit, and Mark, maybe you want to address this, remember that has a board of directors. What happens when you close a nonprofit organization? Can you just suspend, can you just say, we're not going to be doing this business right now? You're not going to lose your nonprofit status?
Well, let me, if it's a 501c3,
right,
You have to deliver your mission. If you don't deliver your mission, you sacrifice your 501c3 status. And if you sacrifice your 501c status, then they can go back and tax you for the year. So if you are a nonprofit and you can't deliver your mission, your board has to evaluate with advice of counsel what it can do to either stay in business and deliver the mission in some alternative way, or it's probably going to have to close.
Now, if you're part of a church, then perhaps, and Lisa, this is where I'm sure your church would need to talk to their attorney. If that's just a service that's provided under many other services, maybe that service is just curtailed, but you're still providing your mission. So you're deploying your funds in other areas of the church. But it is, when you close a nonprofit, there's consequences. Does that answer your question?
Well, that helped me a little bit, but I'm not thinking about closing. What I'm thinking is, if I cannot open, let's say next month, how I can keep my staff if I didn't receive the money for the PPP yet. Because we applied, but we didn't receive the money yet.
I think that's probably the key issue for a lot of businesses. They just simply don't have the revenue to keep going. And it's no different than if you were a business. I mean, you were a restaurant, you opened up your doors and you had no customers in regular times. I mean, you know, the government is helping a lot with revenue, and the PPP is one aspect of it. And I know they're trying to do a second round to help people. But at the end of the day, the prediction is 40 to 50% of small business owners are not going to be able to sustain their businesses and are going to go out of business. And it's an unfortunate result. But part of the reason that John is here is that if there's an opportunity, and if you have more specifics, I'm sure you could call him offline, but bottom line is that you've got to figure out how to protect yourself personally. But quite frankly, some of you are just not going to make it. I mean, that's just the fact. You know, we know most small businesses go out of business in their first year because they're undercapitalized. That's just business in healthy times. Now we have a pandemic. So there's going to be a lot more businesses without revenue coming in who are not going to be able to pay the bills and are going to have to close. It's unfortunate, you know, but it's true. John, I have actually another question that came in I think is very interesting.
Ella, I just want to interject. The other thing is, Lisa, this is where your church, do they have a line of credit with the bank? Money is cheap, so that you could get a bridge loan until those other funds come in. So this is where you need to run your numbers. What does this really look like for me? And can I really stay open over the next 6 months and make those decisions? So again, you can get bridge loans.
So thank you, Robin.
Thank you,
John
Robin.
or Mark, can you answer this? This is an interesting one. Can I force my employees to take a COVID-19 test or an antibody test and share the results with me? I know we have HIPAA. I know, you know, we have that you have to, you know, have a certain health certificate to come initially work, but, you know, maybe a TB test is part of the standards for, you know, childcare providers, but not necessarily COVID-19. It's new. Can I say to every employee, you're not coming back to work until you take COVID? You either have to have the antibody or you have to test negative. Can I force them to do it?
Well, I think you can force them to take the test. I don't think you can force them to disclose the results.
Yeah, that's similar to what I was going to say. I mean, unless the state has other requirements for childcare facility employees or other types of employees, you can certainly ask them to do it, but I don't know that they need to share the results.
So, and how about this? How about if one of my employees voluntarily shares with me that they're positive? Do I have to let my entire school community know? And if I do I have to disclose who it was just in case little Johnny was in Miss Mary's class and she was the one that was positive?
Ellen, I dealt with this issue and we did some research on it. We have a lawyer on our team, so a lot of my data is coming, you know, from legal research. If somebody tests positive in your premise, from a liability standpoint, risk reduction, you want to notify your employees who might have been in contact with them. You don't disclose who it was, but you say to the person positive for COVID, who have you been around? Who do you have direct contact with? You go to those folks and say, you've been in direct contact with somebody with COVID, and you do send them home. And that's the risk mitigation, but you don't reveal who it was.
Okay, but what if I forget who I've been around? I got a lot of people that I come in contact with on a daily basis. I leave out a few, and it turns out the person that I forgot about now has it. I mean, and I find out that you knew about it, but you told 5 people, but you didn't tell me. Am I exposed? Should I just tell everybody?
You know, Ellen, under the DCF handbook guidelines, it does say that a person who is known or suspected of having a communicable disease cannot return without medical authorization, or until the health department or a primary health care provider determines the risk of transmission is no longer present. Now, in the handbook, they talk about, you can't handle food, you can't come back into the facility, et cetera, for 48 hours. Obviously, with COVID-19, the benchmark has been closer to 2 weeks. But I think that that's probably some guidance you could look to in terms of specifically childcare facilities.
Well, that's if I have a fever, because I know there's companies out there that are doing the kind of the remote, the non-invasive temperature. But these are people who are basically appear to be healthy. And I'm just simply saying, I'm rehiring, we're reopening June 1st. If you want to come back to work, you need to take the test and you need to prove to me you're not sick.
So we have Jeff Hurst. Jeff is on, and Bill Clark from licensing. Mm-hmm. Jeff, can you address this from a licensing perspective? And Bill, I know you're on somewhere. Jeff, can you unmute yourself? Aaron, can you unmute Jeff?
Okay.
Go ahead, Jeff.
Yeah, I'm not an attorney or anything, but I will say this. If you follow the guidelines that are in place and adhere to them, they will help you. This is new as far as, someone telling you they have it because maybe they want to work and they don't. But if you suspect and you follow the guidelines, you contact DCF, you contact the health department and bring other people aware in on it. You don't have to make them tell you that, but if they then become under their auspice as that they're looking at them, or they get tested and say, well, you can't come back until I get something, a medical release. If you stick to those guidelines, you're going to be better off doing that than creating or trying to come up with all these new things that are out there, because they're not under the statutes. They're not in the handbook. So I would adhere to what's already in place for your safety and the safety of the children.
I guess the question is, does the county administrator, the governor, whatever, have the opportunity to create new protocols, to protect children? And they probably do. I don't know if in Broward County, if Bertha Henry can say from the licensing standpoint, you now have to require, and I think there was a comment on the chat, which is well taken, that, would we be opening ourselves up to have people take weekly tests? Because, you're not exposed on Monday, but by Friday you're exposed. So I think there's going to be a lot of interesting legal issues and licensing issues that come out of certain, communicable diseases that, we've never addressed before. But,
Right.
as we know, if
Right.
childcare centers don't open, if schools don't open, most parents are not going to be able to go back to work. So, essential is an understatement when we talk about, liquor stores are one thing in terms of an essential business, but I think childcare providers as a whole are clearly an essential business.
Keep in mind, I just want to add real quick, keep in mind the southern region, which strictly falls under the Florida statutes, is different than Broward County. So it is possible that you have some different rules going out. So it's important for everyone to, number one, always contact your DCF inspector to make sure that, you're not listening to someone else and you've got the latest rules as it pertains to the region that you belong to. And that's, I want to say, is it possible that they could make some changes? Yes. And those are the things that will direct us. But until that time, I think it's best to stay in contact with your DCF person, your local licensing person, Tallahassee, everybody that you can, and make sure that you're all on the same page.
Ellen, could I mention something to you? I wanted to look up whether you could require an employee before returning to work to get a COVID test. And actually, the EEOC on April 23rd specifically said an employer can require it prior to an employee entering the work premise. Having said that, because it's spotty, some people are asymptomatic, you're going to have novices shooting, foreheads. I have generally not seen taking the temperature as the best risk management strategy. What we did in our firm is we did a pretty big statement to our employees to please not show up to work if you don't feel well. They have to attest to whether they take their own temperatures daily. They attest to the fact that they've taken their temperatures. So there's other things you can do other than, shoot that forehead. Because I think that's spotty. And if you miss it, another thing, and I think we mentioned this, if you have a policy, you must completely adhere to it. You have to have the internal structure to make certain that you're 100% compliant with your own policy. So I think we get into a danger zone when we start taking people's temperature. I am not a big advocate of it, but I think there's other ways to limit risk as well.
Right, because if you have a policy, if somebody proves that you didn't follow it at least on one day, you actually create more problems for yourself and less problems for yourself.
Right.
Robin, are there any questions coming in on Facebook? Because I know it's been an hour and I know.
YouTube.
Right, let me ask a question to Jeff since he's going to leave. Jeff, if I close my business, or is there a way that I could suspend my license with DCF, my childcare license? How would that occur? Can you unmute yourself? Oh, Aaron, unmute Jeff, please.
Hi, okay. Yes, you can. We've actually had some people in the southern region all do that. They're just going to say, I'd like to suspend my license. Again, contact your inspector, and they can do that. We have people that have done it before all of this for a year because they've had some other issues with land or anything like that. You can, and then when you're ready, of course, you still have to fall under the guidelines, but you can do that. But once you leave the building or you leave the premises, then that's going to be difficult to do because the license is not transferable to a different address. But a person can contact their inspector and say, I'd like to suspend my license.
And what if a person files bankruptcy and they go out of business and then a year later they want to go back in? Is that held against them?
Not for DCF, because we don't get into that. For the Southern Re, we don't get into whether you've had bankruptcy a million times. The only issue will be when you decide to get back in, do you meet the requirements for us to give you a license? Now, certainly if somebody, one of the attorneys was saying, if you follow the guidelines and do everything, if you've been in good stead, it will make it that much easier and faster for that process to happen. But there is nothing that would prevent DCF from giving you a license in the southern region, whether you've had a bankruptcy or not. It doesn't matter, that's not really our business.
So Anita, could you clarify something? When you said that there was the executive order on April 23rd that said you could require employees to take the test, does that also include advising the person who requested it, the results? Or do we have to take it at face value? In other words.
Oh, no. You could request, you could demand the results because
Okay.
it's part of the ADA and business necessity, and they're determining this is business necessity.
Okay.
Ellen, one thing I want to say that we're also live on YouTube, and those of you on YouTube, you can write in your questions and comments as well. Daniel will be picking those up. Daniel, do we have any questions off of Facebook?
So we are actually live on YouTube. Not sure why we were having a little bit of trouble connecting on Facebook.
Daniel,
but,
do we have any?
We don't.
Do we have any?
We have Bill Karp trying to raise his hand.
Okay, Bill.
Bill, Bill, go ahead. You're unmuted. Bill. Bill, I think we can get back to you when we can fix your problem. I know Nandi also has a question. She raised her hand. Nandi, if you can unmute yourself.
We have to have a training on muting and unmuting.
No, sorry. I accidentally had my hand up when I meant to go into the chat box. I apologize.
Oh, okay.
Well, ask your question. Dan, do you have a question?
No, I don't. No, I actually did not have a question. I was going to the chat box and my hand accidentally tapped the waves. So I'm sorry. I apologize, everyone.
Okay, great, great. So are there any other questions? Because we've gone over our hour. Jeff, thank you very much. I know that you have to leave. Are there any other questions? Anybody want to wave their hand? Aaron will scroll through. Let me just see if we've gotten all the questions. I think we're pretty good.
Robin, I can give the email addresses. So if people have specific questions for, you know, Mark, who is part of our early learning practice, or John with respect to bankruptcy, Anita with respect to insurance. Anita's is anita.byer. Her name is on the screen if you all can see it, at setnorbyer.com. It's SETNORBYER.com. And then I don't know if one of you can, you know, type it into the chat room. John is J, his first initial, Pollenberg, at beckerlawyers.com. And then Mark is, pardon?
Let's type that in at the end.
Type it in, okay. Mark is M. Stempler at Becker Lawyers, and I'm E. Bogdanoff at Becker Lawyers. We try to make it simple. But we're happy to talk to you, you know, offline if you have a specific question and concern, and if you need some additional guidance, we're happy to provide that to you. I don't have any additional questions on my list, Robin. I don't know if any additional questions have come in, or if there are any last words that our panelists would like to share. Any pearls of wisdom that you might have for people struggling with this. I know we're all struggling, in terms of kind of staying at home. Some of us are homeschooling, other us are, trying to navigate business, staying alive in business. I don't know, Mark, you first. Do you have any pearls of wisdom?
Just stay safe, be careful, and always think about what you can do to protect yourself, not just, health-wise, but from liability issues that may arise. The more steps proactively you take, the better off you might be in the end.
And John, do you have anything you'd like to share?
Yeah, so what I tell my clients is take this opportunity to evaluate your business, see how you can make it stronger, how you can you streamline it, make it more efficient, hopefully more profitable once this crisis starts to normalize, so that you can compete on a level that perhaps others can't.
John, I'd like to ask you a question. So what are you seeing, especially, I guess, in Broward County? I don't know what your specific practice area is, as far as small businesses. What percentage do you think are actually going to make it through this? And what's the timeline that they need to look at from a cash perspective, do you think?
All right, so I'm all over the place. So I'm in Florida, I have Michigan, California, I'm everywhere.
Okay.
The cases that I'm looking at and the businesses that I'm looking at are probably end of second quarter. They're going to be making difficult decisions by then. So what is that? That's the end of July, I think. They're going to have to make their decisions. And it doesn't matter whether the economy opens. The issue is here now, and the revenues are going into a summer for a lot of businesses go down, especially in Florida. So right now it's a question of getting your ducks in a row and trying to make that tough decision come early summer.
And so one thing I'd like to leave with, first of all, Adriana told us that the American National Bank in Fort Lauderdale can help with PPP. To call fast, she says 954-267-8150. And what I'd like to leave everybody with is, first of all, Ellen, thank you so much for putting this all together. John, Mark, Anita, thank you very much. If the airline industry in 6 weeks could require to be bailed out by the federal government, If the banks could be required to be bailed out by the federal government, if oil is going to be required to be bailed out by the federal government, we need a bailout in childcare. That being said, if you need to make a hard decision that, you know what, I am not going to throw my life's assets into floating a business that I cannot sustain at this point in time and work through it till it becomes profitable again, just make smart decisions and don't let your emotions get in it. As women in business, we tend to put our emotions first. So just make really good choices for yourself moving forward. So I hope to see everybody next week. Tomorrow, by the way, we have Step Up. Now, there is a lot of opportunity right now as well. The other side of this is tremendous opportunity. Step Up can take you to kindergarten, first, second grade, especially if you have school readiness dollars. I really encourage you to get on the call tomorrow and have a conversation with them. I want to thank everybody for joining us, and everybody stay safe. Ellen, thank you again very much.